I can see you, Rachel.
Okay. All right. I think we are live. Hopefully we're live. This is my first time doing this. So we'll see how it goes. And we'll give people a couple minutes to get signed on. This is the first in the Coronavirus Distinguished Lecturer Series. And this is my first time hosting a webinar. So I'm praying that I don't mess this up. I'm praying that the internet doesn't go out and that my cat does not jump onto my computer while I'm talking. So if there are technical difficulties, just hang in there. We'll be back online in a few moments. And if you have to step away to fulfill your homeschooling duties, know that we will post this entire webinar on Facebook and on my website after we finish, so you can come back to it later. Okay, so we are going to talk today about the Paycheck Protection Program and the SBA COVID Disaster Loans. So if you have questions about those, you are in the right place. We've had lots of questions submitted in advance, but we'll also answer as many questions as we can as we receive them live. If you have a comment or a question, send it to us and we'll do our best to get to it. But before we start, I just want to clarify that nothing we say here today is legal advice. We're talking very broadly about lots of things. And if you have a specific legal situation or need specific legal advice, please don't put those details in the comments section, but reach out to us individually and we'll give you our contact information. Okay, now that we have all of our legal disclaimers out of the way, I think we're ready. My name is Rachel Wilson and my firm is Nest Estate Planning. And we specialize in wills, estates, and trusts. I'm a native Savannian, and I also teach wills, estates, and trusts at 2 local universities. And this webinar series is my small way of trying to help small businesses while we're all staying at home. So I hope you get some useful information from this webinar series. As we know, America's small businesses are racing against the clock to survive the economic devastation going on right now. And there are billions of dollars of federal loans available, but many businesses are still struggling to apply for the money as they face technical glitches and confusion about what the lending terms are. And many others have gotten approval but still haven't received funding. And even more are hesitant to apply without knowing what their business will look like when the outbreak eases and when they reopen. Could be as long as the summer. And meanwhile, the clock is ticking and the cash is dwindling. So Jeffrey and I are going to do our best to clarify these different loan programs today and the tax measures that can give businesses some additional cash, but haven't been covered in the media as much. But in the case of this particular topic, the laws are so new that many of the lawmakers aren't clear on what they say. Different SBA local offices are giving different answers, and you can believe that each bank has their own reading and interpretation of these laws and programs, but they're all doing the best they can. And so we're going to tell you what the law says and about our theoretical knowledge of how these programs are supposed to work. But do know that these programs are changing rapidly and your bank may have interpreted some things differently. So keep that in mind. And with that, I'd like to introduce our guest for this topic, Mr. Jeffrey Williamson of J.L. Williamson Law Group.
Hello.
Jeffrey also specializes in estate planning, elder law, asset protection, and taxation. But in addition to that, Jeffrey has his master's in accounting and has worked for the IRS, handles complex tax controversy and other high-level estate and tax matters. So I like to say, if you have a few $1 million, you should definitely call Jeffrey, because his estate and tax planning for wealthy individuals is simply unmatched anywhere. And if you don't have a couple $1 million, you should call me because you still need a will. Anything else you'd like to add to that intro, Jeffrey?
I don't think so. I think that was well done. I'm ready to get started.
Oh, hold on. You're muted, Jeffrey.
I'm muted.
Try again.
Can you hear me now?
Nope, not yet.
Oh, Lord. All right, hold on. How could my mic be muted? Can you hear me now?
I can't hear you. I'm trying to figure out if oh, okay. Jordan says she can hear you. I don't know why I can't hear you.
Okay. I don't know. I'm going to get started. All right. So let me just run through. This is my, I have not been much one to tweet, but I did put my Twitter handle up here. So if you will go on and follow me on Twitter. I'm going to start trying as best I can. I'm not the technology expert that Rachel is, but I'm going to try to start tweeting occasionally about updates that we get. So anyway, there's my Twitter handle, and if you have other questions, my email and phone number's there. All right. So this is just my disclaimer. This is, of course, not binding legal advice. You should consult your own person for your specific situation. The IRS used to require me to give my Circular 230 notice. I don't think I have to do that anymore, but I'm extra careful and just say, you can't use anything I say to create a tax shelter. So let's talk about the CARES Act. All of this with the SBA program and that you're hearing comes under this Coronavirus Aid, Relief, and Economic Security Act, sometimes called the CARES Act. There's two programs underneath the CARES Act. That's the Paycheck Protection Program and the what are called EIDL loans, Economic Injury Disaster Loans. I'm going to talk about those two programs and how they interact with each other. Then I'm going to talk about other tax benefits, individual tax relief, and a couple of employment tax credits. If you have questions about the tax issues or getting your payments, I put a link there to the IRS website. That's probably too long to write down, but you can go onto the IRS website, just irs.gov, and there's a link there for coronavirus issues and questions. All right, with that, let's get started. So let's talk about the Paycheck Protection Program. Eligibility: businesses not more than 500 employees. Also, nonprofits are eligible. Some businesses, if you have a restaurant that has more than 500 employees, they'll count it for each physical location. So some businesses with more than 500 can qualify, but generally it's less than 500. The loan is forgivable. So if your business is in operation before February 2019, the max loan is 250% of your average monthly payroll between February 15th and June 30th. So that's well, let me correct. The covered period is February 15th of this year through June 30th of this year. They take your average monthly payroll for the prior year and will give you that loan from February 15th through June 30th of this year. And that's what I meant there with the covered dates. Let me move on. So overview of the loan: self-employed and independent contractors. I've gotten this a lot. You are eligible. If you're a one-man shop, or one-woman shop, you are eligible for this loan. Partners and partnerships are eligible. Even if you're getting your income from a K-1 from a partnership, you're eligible. Loans are non-recourse. That means normally if you go to a bank and you sign a mortgage or any kind of loan, you have to sign a personal guarantee. So if they take the collateral and there's not enough money there left to pay, they can come after you personally. These loans are not. There's no collateral required, and the loans are non-recourse. Loan origination fees are reimbursed by the SBA, and you apply for this Payroll Protection Act through your SBA approved lender. I sent Rachel an email with an attached guide from the SBA, and Rachel, I assume you're going to post that somehow to the webpage. But for those of you who want it, you can just email me. I'm going to flash my email address at the end, and I'll send it to you directly too. But Rachel's going to post it. The SBA guide is like 10 or 11 pages. It's a very good, written in plain English guide for anybody who posts that.
I will post that as soon as we finish recording. I'll post all of this.
Okay. All right. So let me move on. Payroll costs. So I said they'd loan you up to 250% of your payroll costs. What are those? Salaries, wages, tips, etc. Health insurance, paid leave. If you've got paid leave, that is included. Retirement plan contributions, 401k, SEP, IRA. If you've got a defined benefit plan, not many employers do anymore, but that would count. It does not include compensation of employees over 100,000. So Rachel is not going to qualify, but most people will qualify. Okay, and it's prorated. When they say 100,000, they don't just mean over the covered period. They mean 100,000 basically annualized. compensation. Now, when you're doing this $100,000 test, all of these other things here are not counted. So if you're trying to figure out who qualifies and how much over 100,000, you just look at basically their salary and wages, not all of this, the health insurance, the paid leave, the retirement. So that's just a little quirk in the law that you need to know when you're doing this testing. Okay, so here's just an example, and this comes right straight out of the SBA regs. Assume no employees make more than 100,000. Your annual payroll in the prior 12 months was 120,000. Your average monthly payroll was 10,000. Multiply by 2.5, $25,000. That's the total amount of the loan. That's the maximum amount. And that's how much you can get. When you apply for this, you will have to apply again through your local SBA lender. I think the SBA sheet that I gave Rachel has a link where you can get a listing of all approved lenders. I was told some people, I bank with Synovus, that's who I used, but I was told some people who went with Wells Fargo early on that Wells Fargo had shut down because they were just overwhelmed. And so, they were referring people to other banks, but there's a whole list of approved lenders you can log on to the SBA website and get that list. The application is fairly short. You probably will need like maybe your last year's an annual wage statement showing what you paid your employees, maybe your last year's tax filing, your last 4 quarters of your 941. That kind of thing. If you're using your tax return, if you're self-employed and you hadn't filed your 2019 return yet, they will go based off on your 2018 return. So here's another example. Some employees make more than 100,000. Annual payroll is 101.5 million. So let's just say you had a few. You subtract down what they made less up to 100,000. You take that off the top. So you'd say subtracting compensation in excess of an annual salary of 100,000, it gives you 1.2 million annually. You divide that by 12, multiply it by 2.5, and you get 250,000. There is a cap on this loan of $10 million, but most small businesses are going to fall under that. So let's move forward. Allowable loan proceeds. What can you use this money for? Payroll costs, salaries, health insurance, and of course, retirement plan contributions. All those payroll costs I mentioned are eligible to be used. Interest on a mortgage obligation, rent and utilities, interest on any debt obligations before the covered period. So those are your allowable loan proceeds. So let's talk about forgiveness. Principal forgiven if proceeds for qualifying expenses used during the 8 weeks after the loan is originated. So I've drawn myself a little timeline. I didn't have time to put it on the slides, but you've got basically the covered period, which is February 15th, 2020 through June 30th of 2020. You can get one of these loans anytime during that period. The 1 year prior is the year you're going to use to measure how much your loan, the maximum amount of your loan is. Okay. But from the loan origination date, the date they give you the money, you've got 8 weeks to spend this money. Now, as Rachel said, there's some errors in the regulations and some things they hadn't thought of. What if you're still down when you get this money? Some people that applied early maybe have gotten their money or about to get their money. We've still got a shelter in place order. What's the SBA going to do then? I don't have an answer to that question. Okay, so I'm just saying this is going to change. So now the 8 weeks may not. And let me just say this too. Even if you can use the money beyond the 8 weeks, it's just may not be forgiven as long as you use it for these qualifying expenses. So let me move on. Rent and utilities. So that's what you have to use it for. Limitations on forgiveness. If you have a significant reduction in the number of employees, if you base your maximum amount on employees before you had a massive furlough and you get a massive amount in, obviously you're not going to be able to use it up if you've got 5 employees left. If you've reduced the salaries, if it's reduced by the amount you reduce salaries in excess of 25% during the covered period. So if somebody was making, I'm just going to use this 100,000 even, and now you're paying them 70, that difference is going to be reduced in the amount that's going to be forgiven. That does not include employees if their annualized pay was greater than 100,000. So if you had somebody who's making 100, you took them to 95, that's not going to count. Or took them to 99, it's not going to count. Any remaining balances after forgiveness is converted to a loan. The loan is guaranteed by the SBA. The maximum term is 10 years from the date on which the loan forgiveness is applied for. Interest will not exceed 4%, but I've seen some things from the SBA that said the interest could be as low as 0.5% or 1%. So even if you don't get forgiveness on this loan, it still could be a very generous loan. There's no loan fees and no prepayment penalty. So that's a big deal. Now, there is a certain requirement that only 25% of these proceeds can only be used for rent and utilities and other things. 75% has got to be used for payroll costs. But here's a little trick. Suppose you can't spend all the money. Some employees just haven't come back. Remember I said that 401k and SEP contributions apply, health insurance. Make sure you put all that in. You can pre-fund if say you got a SEP. We have a SEP IRA here at the law firm. So it's got to be 5% of all the employees' annual salary. Well, you could put that in as part of your cost to get up to that amount. That's counted as payroll costs. So let me move on to the next slide. Before I go to these idle loans, I want to take questions, and I want to give a couple of other points that aren't in the regulations, but just word to the wise. I would create a separate account for this money, because at the end of the 8 weeks, your bank is going to have to verify that you used the money for what the regulations say you can use it for. And if you have a separate account and you show that the money went into
that aren't in the regulations, but just
and then you show that it's paid back out,
I would create a separate account for this money.
Rachel, are you getting?
Because at the end of the 8 weeks, your bank is going to have to verify that you used the money for what the regulations say you can use. And if you have a separate account and you show that the money went out in the regulations, and then you show why it's back out, I would create a separate account.
Hold on, we're having technical difficulties.
Because at the end of the 8 weeks,
I think my internet's still catching up. So
okay.
are you ready for some questions?
Yeah, I'm ready. Let me just make this one statement. The reason you want to have a separate account is so it's an easy audit trail. You can show where you got the money, where it was put into your account, and then what it was paid out for.
Okay, so I can't hear Jeffrey for right now, but I'm gonna give you our question. This comes from an attorney in Alabama, and she says, "Is there a citation addressing the ability to use income from a K-1? She's talked to her banker, her CPA, and several individuals from the SBA, and nobody seemed to know. The accountant thought that the K-1 income was excluded, and she can't find anything in the regs that address that. Do you know anything about the ability to use a K-1?
Yeah, I do. I don't have the citation in front of me because I'm technologically limited while we're on this website. But if you will tell her that she will email me or post that question, I'll get her that citation.
I don't have it in front of me because I'm technologically limited while we're on this website. But if you will tell her that.
If you're ready for the next question, hold up a finger.
I'm ready.
Okay. All right. The next question comes from Donna, and she says, if I go ahead and use funds for utilities, interest, etc., can that portion be excluded, even if she's not able to use it for payroll?
Does she mean by excluded? Does she mean forgiven? Does she mean for? I mean.
All right. The next
if you use it for,
even if she's not able to use it for payroll.
If you use it for utilities, it'll be excluded as long as it doesn't exceed that 25% threshold. But you can't go over that 25%.
Even if she's not able to use it for payroll.
All right, you still there? Any other questions, Rachel?
Sorry, Jeffrey, I can't hear you, but you continue on and I'll try to fix this.
Okay, all right. Well, I'm gonna go on to the next. Okay. So the next loans are these economic injury disaster loans or EIDL loans. Again, businesses of not more than 500 employees, a nonprofit also qualify. I think even a tribal land group can qualify, VA organizations. Borrower can request up to $10,000 be provided within 3 days of applying. Now, that's what it says. I will tell you, I know some people that have applied for this and have not gotten their 10 grand within 3 days, but that's what it says. There's a box you check, and I'll talk about that. Advance does not need to be repaid even if the loan is subsequently denied. But now your paycheck protection, I've advised my clients, most of them, to apply for both. The paycheck protection loan forgiveness is reduced by the advance. So if you get a 10 grand advance and you got 250,000 from your paycheck protection, and let's just say it was all forgiven, only 240 would be forgiven because your 10 grand would reduce your forgiveness. Proceeds from the 10 grand advance used for basically the same thing as your Payroll Protection Act used for, but also repaying obligations which cannot be met due to revenue losses. This may seem duplicative, but it's not, because your EIDL loan can be used outside of your covered period. That payroll protection is only for that 8 weeks after loan origination, at least is in the regs right now. An EIDL loan can be used beyond the 8 weeks or a period prior if you wanted to. All right. How to apply. So this one, you go to your SBA website, okay? And I put the address up there. You can get both the payroll protection and the EIDL loan. You can't use it for the same expenses, but you can use the EIDL loan outside of the covered period. And I say that if you use your EIDL loan to cover payroll for certain workers in April, you can't use a payroll for the same workers in April, although you could use it for payroll in March or different workers that weren't covered under the payroll protection. All right. That loan, let me just say the EIDL loan is up to $2 million. They'll let you borrow up to $25,000 with no personal guarantee and no collateral. But if you put up collateral, you can borrow even more than that. And it's pretty generous. I mean, the interest rate is less than 4%, I think.
Jeffrey, on that point, we've got a question.
Okay.
Okay, so Greg says, is the amount of the disaster loan truly up to $2 million? Because recent reports have said it's being limited to $25,000 or $10,000 grant and a $15,000 loan. Do you have any information on that?
Well, I'm going by based on the statute. For example, on the payroll protection, it's supposed to be amortized over 10 years. But when the SBA put out their regulations, they said it was amortized over 2 years. So I think you're getting into a contest between what the rule says and what the SBA may have done. The SBA in their own filings on the SBA website say up to $2 million. So I don't know. That's an individual case. Now, the way I understand the program works, you apply on the website, you get an application number. They say, don't call us, we'll call you. And they get in touch with you and determine how much you need. I'm using the 2 million figure based on the rules and what the SBA website says. So I don't know how you if you're having problems with them, probably what you need to do is, retain an attorney and say, listen, I need to, be able to show why you need the money.
Oh, don't worry. Greg has already retained several attorneys for this, but
Okay.
thank you for the answer to that question.
I hope that was that. But there's already been some conflict between the statute and the regulations. And I heard some rumors, that Marco Rubio got on a call with the SBA and said, y'all need to straighten up. And this, there's been some internal drama. So let's go now. Suppose you don't apply for any of these loans. What about tax provisions? Some of you have heard of this individual tax credit. I need to say exactly, people just think it's free money from the government. It is in a way, but the way they're treating it is as a tax credit on your 2019 taxes. Okay, they're saying they're deeming it as a payment for that period, and it's refund. I mean, you're not going to have to pay it back, but that's the way they're treating. The IRS is treating it like a credit. It's $1,200 if you're single, $2,400 for married, $500 for each qualifying child. A qualifying child is generally any dependent you got under age 17. There is a phase out for the credit. Okay, if you're that AGI stands for adjusted gross income. We got a lot of lay people on the call, so I'm not going to go into the details of what adjusted gross income is, but it's broader than just your salary. Sometimes it can be. But it starts to phase out when you get over 75,000 for your single individual, 112,500 for head of household, 150,000 for married filing joint. The credit is refundable. So what is it? This is a big deal. What does refundable mean? It means you don't have to have taxable income to get the credit. Because usually a credit is a dollar for dollar reduction against tax liability. But suppose your tax liability is zero. They're still going to give you your $1,200 or whatever you qualify under this plan. Now, the way they're doing it, for most people, is that they're taking whatever account you used. If you file your taxes and you put your bank account number, on your send my refund to this account, that's where they're sending the money to, followed up with a letter. But if you go into the IRS website, if you didn't file your return, or they don't have your bank account, or if you didn't file a return, some people don't, they still want to give you this money. There's a portal that you can go to online and fill out and apply for this money. But this is just my advice would be to file your returns, because I think it's going to be a red flag if you hadn't filed for 5 or 6 years and all of a sudden you're wanting $2,400 from them. That's just, I mean, I don't know that, but just based on what I'd want to be up to date. So let's talk about other provisions in the Relief Act, CARES Act.
Wait, is this the taxes part?
Yeah.
Okay, before we get to that, you want to answer 2 questions about what's eligible for forgiveness?
Yes, sure.
Okay, so Cheryl asks, even though it's not considered in determining the loan amount, can we claim our FICA expense for forgiveness?
Well, it is payroll costs. The FICA is included in that. I mean, if you're paying those taxes, that's going to be included. That's part of your payroll costs.
Okay. And then there was another one from Rhonda. Rhonda says, can you prepay health insurance for the year with the Payroll Protection Act, or can you only pay your normal monthly premium? It's a great question.
Well, I think you're only, the regulations are not clear. That's why I would do a separate account. I think you can prepay your retirement plan for the year. I need to get back on that. I think you probably can, because they're allowing prepayment of retirement, but I don't have a specific statute to cite to that. That's why, again, that's why I would recommend a separate account. That way, if you pay it out of that, if you know what's extra, if they deem it not forgivable, then the money,
And basically, you've taken out a loan at 1%, which is
still
prepaid money.
Yeah, and it would only be that portion that wouldn't be forgivable. I know you can prepay retirement.
Okay.
Okay. What's the next? But if they will, with your specific questions, again, these regs and everything are changing daily. You guys email me. My email address is going to, or even tweet me. I'm starting to check my Twitter handle. I will try to look it up, get you a specific site.
Okay, great. All right. That's all our questions for the moment. So
Okay.
continue on with the tax stuff that the media has not covered.
Okay. So for those older Americans, if you have a retirement account, like a 401k or IRA, when you get to age 72, the IRS requires you to pull money out of it. It's called required minimum distributions. But for this year, they're waiving the RMD requirement. You're not going to have to pull money out. But suppose you've got $500,000 or $100,000 in a retirement plan, and because of all this, you'd like to get access to it. Well, generally, if you pull it out early, there's a 10% penalty. But under the new rules, they're going to, if you pull up, you can pull up to $100,000 out of a qualified plan, and there will be no penalty. Now, having said that, my recommendation would be to see if they'll let you borrow against the money. I think the loan threshold amounts for these retirement plans have been increased by a lot by the various providers. I would recommend getting a loan because that money's just sitting there and it's growing for you. If you pull it out now, the market's dropped to nothing, or not nothing, but it's taken a hit. If you have to, you have to, but I would do a loan. But even if you pull money out, you're not going to be hit with that 10% penalty. However, you will have to pay the tax. So bear that in mind. You got to, unless it's a Roth. A Roth is paid out of after-tax money, and when you pull it out, it's tax-free. But if you got a 401k or IRA, you got a deferral going in, so you're going to pay tax coming out. And if you're pulling out large amounts of money, you're going to be getting what they call bracket run. You're going to run up the brackets and be in a higher marginal tax bracket. So just be careful about that. It applies to COVID patients, spouses, and dependents, and anybody else who experiences, financial hardship. So suppose you don't get the money and you still continue to pay your employees. There's a refundable payroll tax credit. Credit is equal to 50% of the wages during the COVID-19 crisis, but up to the first $10,000 for each employee. Eligible employers, if you fully or partially suspended operations, experience greater than 50% reduction in quarterly receipts, you're going to be eligible. Now, under the CARES Act, they're allowing you to get an advance on these credits. Basically, the IRS can actually cut you a check. It's my understanding. It's all, again, this has all happened in the last less than 30 days, but that's my understanding. There's also a waiver on failure to deposit every quarter, or something, depending on how large you are. Some employers are daily depositors of payroll liability. They're going to waive possible waiver of applicable penalties for failure to deposit your employment taxes, your employment tax, your Social Security, FICA, that kind of thing. Administrative provisions. Most everybody knows that the filing deadline has been extended to July 15th. That is filing and payment until July 15th. Now that is for income tax. That is for income tax and quarterly estimated payments of income tax. But other types of taxes may not have gotten that relief. And that's only for calendar year end taxpayers. If you're a corporation out there and you've got a fiscal year end, according to the IRS guidance, you did not get an extension. You can get a deferral of payment of payroll taxes through year end, but it's for Social Security only. So OASDI part of your payroll. Your estimated withholding, Rachel's working for me and I'm withholding income, her estimated income tax. I can't defer that.
You can't afford for me to work for you, Jeffrey.
I know it. That's
expensive.
right. That's right. But if you did, if you receive, this is important to know, if you receive a Payroll Protection Act loan, then this is not available to you. They expect you to use that loan to pay the payroll, pay your employees. You can't have your cake and eat it too. So you're not going to be able to get a loan and take a tax credit. But, well, I may as well just say this. Pretty much everything I say bears repeating. The money is running out. So I saw a news report just the other day, they had allocated whatever it was, $350 billion, almost half of it was subscribed. So I put these tax provisions in there. Suppose the money is out when you apply. Now, Trump has said he's going to go back and get them to appropriate more money, but they had a little brouhaha about that on Capitol Hill yesterday. They may or may not appropriate more money. So the theme for the day is apply, apply, apply. Now is the time to lever up, period. I mean, the sky's the limit. But if you don't get approved or you don't get the money, I'm putting these administrative provisions in here to let you, there are some additional tax breaks. Now, I mean, obviously you're in a cash crunch, that may or may not be helpful, but you need to at least know about it. Okay.
I got a tax question.
Okay. Go ahead.
So, I mean, I don't know how much you want to cover about net operating losses and excess loss deductions, but
okay.
Who should be amending their tax filings from 2018, 19, and 20? When do we know the call have them, amend our tax filings?
Okay. So before this CARES Act had passed, Congress had enacted another piece of legislation that forbid carrybacks of net operating losses. So it used to be if you had a net operating loss in the current year, you could amend the prior year. You go back 5 years. Then they changed it to 2. But anyway, that was what's called a net operating loss carryback. Carry it back against taxes you paid and get a refund. Well, now they've suspended that again. So if you had an NOL or you're going to have an NOL for 2019, certainly for 2020, looks like you're going to be able to carry back. So I would be talking to my accountant and, that's money to you. Now, having said that, everything, the devil's in the details. The IRS is closed right now. I mean, I just got on a call with tax practitioners. The only thing that I know is open that you can call in or get to is the taxpayer advocate, your local taxpayer advocate office. But everybody else, I mean, all these service centers, Kentucky, New York, Ogden, Utah, they're shut down. I mean, by shut down, I mean not working from home. I'm talking about kaput. So I don't know when they're going to go back online. But
so does that mean we're less likely to be audited this year?
Well, this is collections is shut down. So, less likely to have a levy or a lien or anything like that. Now, reckoning day will come, but it's not going to come right now. Yeah, I mean, audits are a low priority right now. There's nobody auditing anybody. The tax court closed. So there you go. Let me talk about this leave provision. This was under the Families First Coronavirus Rescue Act, FICRA. This is different than the CARES Act, but it was passed March 18th. So if you had an employer with fewer than 500 employees, but there's a cutoff, you had to be, if you were less than 50, this didn't apply, but you were required to give them sick leave and pay a certain amount per day, $511 per day per worker, $200 if they were a caregiver. But if you did this, if you met the requirements of being forced to do this, the government gave you a credit on your Social Security payment that you had to make on their behalf. And that was a refundable credit. And it also applied if you're a self-employed individual and you put yourself on sick leave, you could also qualify for this credit. All right. So here's the summary. You can be eligible for both the payroll protection loan and the EIDL loan. All things being equal, I would probably apply for both. Why not? Best to do it quickly before the appropriations run out. You apply for the payroll protection loan at your local financial institution, whatever bank you deal with, or Rachel's going to post that sheet. It's got a way to get SBA approved lenders. And it answers a lot of questions. I mean, not all of them, but a lot of them. The EIDL loan is on the SBA website. I think I put the link earlier in the slide. You just go online. I would probably have a copy of my last year's tax return. You have to put your tax ID number and a few questions, but it won't take you 20 minutes to fill that out. And you'll get a confirmation number. I would recommend printing that number. I would again use a separate account for the payroll protection loan proceeds to make the audit trail easier. And then of course, all these credits, some of those credits I mentioned are available, but they're not available if you get the loan proceeds. With that, I'll take more questions. Rachel, I can't hear you.
How about now?
Now I can, yes.
Okay, so we got a first question is from Julian. He says, I'm a sole proprietor of my business in 2018 and I don't take a salary. My money goes back into the business. Would I qualify?
Yes.
Well, what could he use the money on if it doesn't go to payroll?
Well, but he's got, okay. Yes, he qualifies because they're going to treat him, the money that he reported on his tax return on his income from self-employment, they can use that money. So the answer is yes, he qualifies.
Okay. All right, let's see. Next question is from Tim. He says, I understand that the Paycheck Protection Program funds can be used for payroll, rent, utilities, etc., but my bank is telling me I can only use it for payroll. Can they do that, and what should I do?
I don't see how they can, but at the end of the day, for forgiveness, your bank is going to have to be, there's going to have to be somebody at that bank that signs and says, you know, you used it for this and that and the other. I would say point out to the, apply and get the money. Just get the money. Put it in a separate account and have that fight another day. But I don't think they can. But just ask to see their supervisor. I think it's as this law becomes more developed and more people know about it, and the bank's legal team advises the loan officers more, that probably won't be their opinion 2 weeks from now. So my advice is apply and get the money, but just put it in a separate cubby hole until you get approval from them. That
is very sound advice, Jeffrey.
Yeah.
Talk to us about whether this money is taxable. So like loans that are forgiven under the the Paycheck Protection Program, are they subject to federal taxation?
No. Okay, this is a very good question. I don't know who asked that, but normally under the tax rules, you if you borrow money and the bank forgives part of that loan, that's income to you. It's called cancellation of debt income. Okay, and it's under Section 108. But when Congress passed the CARES Act, there's a specific carve out that says the payroll protection forgiveness, provided that you follow all the steps, is not going to be income to you. So this is a tax neutral event.
All right. Greg has another good question. So when does the 60 days begin? Does it begin the day of funding or any 60-day period you choose from February 15th to June 30th?
Okay. According to the rule, it begins the date of funding. That's my understanding. But again, there's been some back and forth about that, and there probably will be some changes. But when you say the date of funding, it begins on what they call the origination date, quote unquote. But the origination date is basically the date of funding. But obviously, like his business, he shut down. What's he going to do? I mean, you got this money. Again, I would just keep it separate and hopefully probably they're going to come out with some rules that will allow you to elect a different period. I can't say that, but that would be my strong suspicion.
That's the thing that I've read most in the media is restaurants are saying we're closed right now. We don't want to use this 8 weeks. We want to use a different 8 weeks. So you think they will probably revise that once they realize?
I think they will, because what's the point of getting the money? If you got the money and you shut down, I mean, what are you gonna do? But right now, the technical rule is the 8 weeks starts on the date of origination.
We had another question. Basically, it's what are we waiting for? Why is this taking so long? And I actually did some research on that. And I think that one of the reasons is that banks are concerned about fraud because the PPP loans don't require the usual amount of background information or creditworthiness that come with a conventional loan application. And banks need some sort of safe harbor to protect them against fraud claims and more due diligence. Because the banks could be left holding the bag on this, like in 2008.
Well, I think you're just dealing with a massive government program. Banks were only at first taking customers that they had been doing business with. You know, time is, I mean, the clock is ticking. I don't know, but I mean, we're talking about, hundreds of billions of dollars to be distributed. So I don't have a good answer as to why we're waiting, but this all goes back. I know I've harped on this. Separate account for the PPP money, just segregate it.
My hope is that we'll see the government dramatically improve the approval process and address the concerns that the banks have regarding fraud and guarantees, so that the banks will feel more comfortable passing out that money.
Well, you've got to submit, your 9-4. I mean, you do. It's like the PPP loan is not a no-doc loan. It's not a, you got to submit some paperwork, a payroll report, a 941, something. I mean, I guess you could create that out of whole cloth, but that, I mean, it's not like it's just, you fill in. Now you are going to have to certify that you're using that you've experienced a downturn and you're going to use this money for the purposes therein. Obviously, I think this goes without saying, but you get the money and you say, I could use it for payroll, but I'd like a new Yukon Denali. That's why you need to, but that's another reason why I would advise clients to segregate it, because money's fungible. Money goes into your general operating account, and suppose you did, I mean, now's the time to buy maybe a new vehicle because it's 0%, 84 months, just sign and drive. You need, if you want to do that, but then you're going to, which money is which? Did you use the PPP money or the other money? You see what I'm saying? So that way, if you keep the money separate, there's less of an argument about that.
Okay.
I'll go to my last slide here and just, this is my email address. For the lady in Alabama that had the question about the K1, just email me and I will get you a site for your bank or whoever asks you. Again, there's my Twitter handle. If you'll go on and follow me, whatever it is you young people do on the Twitter. I'm going to try to start tweeting. And anyway,
I'm so impressed that you're going to tweet, Jeffrey.
Yeah.
2 more questions have come in. Who determines eligibility, the SBA or the lenders?
Well, on the SBA loan, the SBA is going to determine eligibility. I mean, the SBA has the final say because they're the ones backing up the loans. But I don't think there's going to be very much pushback, as long as you, again, I would apply. If you're out there and you're a sole proprietor, I understand that question was excellent. I don't pay myself a wage or whatever. He qualifies for the PPP and he'll qualify for some of those credits that I talked about if he doesn't get a payroll loan.
Got a great question from Jenny, and she says, I understand the basics of the program, but what are the expectations and what criteria are they really evaluating when looking at the applications? So I guess what should small businesses be ready to demonstrate to receive one of these loans? Is it truly first come, first serve? Are they picking and choosing which businesses get them on certain criteria, or what are they really evaluating when looking at your application?
I think if you were, well, and I didn't put this in the, if you were a new business, there's a separate criteria. But if you were in business, let me just go back to that slide. If you were in operation before February 2019, they just look to see you were in operation before then. They look at that payroll report, and I think that's it. I mean, the whole point of this is not to determine who's credit worthy. This is what's that show? Love is Blind. So let's hope the banks are blind. So I mean, I think now if you were in business, I didn't put this on the slide, but maybe I should have. If you were in business if you just started your business this year or 2019, there's a different set of criteria that might hold you up some, although it's not ostensibly under the regs, but it might. But if you were in business before then, I think it's first come, first serve. I mean, if I were a business, I wouldn't let the sun set till I tried to fill out both of these. And I think you can apply at multiple banks.
But what if you don't bank at another bank? What if you bank at one bank? Are they going to really take somebody from that they don't have a banking relationship with?
I think there's going to be pressure for the banks to service the people that they need. So I talked to someone who got a loan, who was approved at a smaller bank, and they said, we're out of cash because they have reserves requirements that they have to meet with the Federal Reserve. They just can't, dole it out. They just, because they blow their reserve requirement. So I understand, obviously banks are going to take care of their own first, but there's no reason why you can't apply at multiple banks. And that, I didn't think of this when he first asked the question, but that question about, my bank's telling me I can only use it for payroll. Well, shop around.
Travis asks, what are employers supposed to do for paying employees until we get the PPP loan to pay them? So, a piggyback question to that is a friend was talking to me about an SBA bridge loan. Is that something that you could suggest? How does that work?
Well, a bridge, I don't think I would be applying under these programs. If you lay people off and bring them back, I think there's some backup provisions. There's really, you can, this is beyond the scope of this presentation, but if you furloughed employees, so they're going to get $300 from the state plus $600 from the federal government. That's supposed to start soon. So they'll be getting $900 a week. Then when you get your loan, you can bring them back on. And if you furlough them, it's my understanding they can still work under the new rules for you part-time up to a certain threshold. I think it's $300. I'm not a labor and employment attorney, but that might be one of the things. What you should do is contact if you have a tax attorney. That's why I'm doing this, because not everybody has a tax attorney on call. You call them, or you contact your accountant and work through the details.
That's a great answer. Do we have any more questions? Anybody want to submit another question? We're at about 50 minutes. So anybody has another question, send it our way. In the meantime, I'll tell you, you can reach us at nestestateplanning.com and jlwlawgroup.com. And both of our sites have a link where you can email us directly. And I will be posting the recording of this webinar on my website and on Facebook and anywhere else I can figure out. And we're going to keep doing these. Next week's webinar will be with a financial planner and a life insurance agent to talk about risk management in these uncertain times, because I'm hearing some people say, dump all your extra money into the stock market right now. I don't have any extra money to dump in right now, but if I did, what should I be dumping into the stock market right now? How do we know when the market's hit bottom? What signs are we looking for? And then 2 weeks from now, same time, same place, I'll be talking with 2 bankruptcy attorneys about business bankruptcy versus personal bankruptcy, chapters 7, 11, 13, and the differences. But I especially want to talk to them about, when do you want to call a bankruptcy attorney? Do we wait until all of our bills are 6 months overdue, or do we call them when we know that our bills are going to be overdue because of this crisis? So really, when do we call in the lawyers? So we will keep doing these as long as we are under stay-at-home orders. And
Rachel, I want to say one quick thing about that.
Yeah.
The CARES Act did 2 things with the bankruptcy provisions. They increased the limit for simplified small business bankruptcy, that what they call the simplified Chapter 11, from 2.7 million in debt to 7.5 million. So the threshold has gone way up. Also, if you're going to file a Chapter 13, an individual, like a reorganization for an individual, and is COVID related, it changed the payment period from 5 years to 7 years. With regards about when I work with bankruptcy attorneys all the time in my tax collection and controversy practice, if your main issue is taxes, there's usually a better way to work with the IRS. There's usually, you can get an advocate to try to resolve the issue. If solving your tax problem is not going to solve, you got a whole bunch of other creditor problems, then, this is just a general rule, then bankruptcy is probably the better way to go. And certain tax debts are dischargeable in bankruptcy, but some are not. Payroll taxes in particular may not be.
good point. So here's another question. So Travis is expanding on his question. He said, so we won't be penalized for furloughing our employees so they can take unemployment right now and then getting the loan and bringing the employees back. Is that okay?
That's my understanding. Yes.
Okay.
Now you got to bring them back at the wage you hired them. you know, if you bring them back at a lower wage and it falls below that 25%, that may affect forgiveness. But if you bring them back at the wage at which they left you, you should be okay.
Okay. Ike asks, what about 1099 workers? Can you elaborate on that?
Well, it's complicated. If that person is getting a 1099, they're going to be able to apply for the program on their own because they're deemed to be an independent contractor. So if you've got somebody that's working with you and you're giving them a 1099, they should apply on their own for this relief. I would tell you just need to be careful about who you're giving 1099s and W-2s to, because you can't just decide somebody's an independent contractor. They have to, you know, they have to meet certain requirements. And if they work with you all the time or regularly, should be issuing a W-2. But 1099 workers are eligible. They're treated like self-employed individuals because that's what they are.
We have a question from Carol. Can we use money for payables?
You have to use the payroll protection money for what it lists. Now, the idle loans you can use for other things, obligations. Well, when you say pay, I assume she means creditors of some kind. I mean, if the payable is rent, if the payable is utilities, if the payable is payroll, then yes. If it's something else, I would not use my PPP money for anything other than what are those. In the slides, I list the permitted expenses.
The payables would be idle loans. We would use the idle loans for that.
Yes, yeah, other payables. Yes.
Okay. All right. Well, we are at an hour, and I think that's probably the limit of most people's attention span. So thank you guys so much for tuning in. And again, you can reach us at jlwlawgroup.com or Nest Estate Planning. And if you have any questions, just send us an email or write us through our websites, and we will answer all that we can. And we hope that this was really helpful for you guys. And see you next week, same time, same place.
Bye-bye.
Bye, Jeffrey. Thanks.
Okay.